Good morning, traders. This is Brad Matheny. Today is the 5th of February, Wednesday. Feels like a Saturday over here for some reason. I don't know, slept well and I didn't woke up thinking it was a Friday or a Saturday. But anyway, it's a Wednesday. So here we are. We're moving into let me come over here, get to the SPY cycle patterns. We're moving into the second day of the rally phase. Yesterday, we saw a little bit of an upward movement. Today, I think we're going to see kind of a carryover of that same type of pattern. I'll explain it to you here. This is my SPY chart. You can see we're opening at 599 right now, 35. That's down a little bit from yesterday. But I think what we're going to be looking at is pretty much, I'll come over here. This is 4 hour. I'll come over here to daily. What we're going to be looking at is, see, we're right down in the midst of yesterday's range. But really what I think we're going to be looking at today, guys, is come down here to, well, just go to 1 hour. It's kind of a duplicate. So you know that I expected us to run into some consolidation, just like I drew here. We are essentially consolidating right now. And where we're at with this is we are looking to see a pretty solid kind of rotation day moving into kind of a late afternoon, I think, selling trend. And that's actually gone way too far. Let's take a look at the days here. Okay, there's the 5th. So we're probably going to look at something like this. Ending the 5th, beginning the 6th with a little bit of a breakdown, and then moving into the 7th with a moderate breakdown into this 580, 585 area. So that's kind of what I expect today. Little rollover top, maybe getting back up to the 602 and a half level, maybe a little higher. I think we're going to be looking at, a little bit of momentum in the morning to the upside, a little bit of a rollover to the downside, and then carrying down into tomorrow. Tomorrow is a counter trend rally, which could be a fairly solid downward trend, trying to retest this low here. And I think we're looking at a pretty solid rolling trend right now. So in other words, rolling through this consolidation, and you can see if I draw it, the consolidation range going to be somewhere in this area. So that's what's setting up right now. It's a pretty broad consolidation range into this breakdown, and it really plays out through this blue excess phase peak here. Okay, we've come in, we've broken up the excess phase peak, we've broken below the low here, which is this line. We're rolling into this consolidation. Next, we'll be moving down, if we break down here, into the ultimate low, and then possibly trying to come back out of it. So I want you to realize where we're at, and that today we might get a little bit of a breather back here up to the 602 and a half area, I think. And then I think we're going to roll downward for the next 2 or 3 days. Pretty solid setup into this deep V pattern back over here on the 10th, 11th, 12th. Now, remember, I call it the 10th, 11th, 12th because the actual pattern itself sets up on the 9th. So come back over here, try to show you the pattern. There we go. The pattern sets up on the 9th, right there. February 9th, deep V bottom in a breakaway trend. Then on February 10th, we get the peak, major bottom, moving into a February 21st major bottom into weakness. So that's why when you come over here and you take a look at my chart, I'm showing you basically these two lows that set up. The major low here, the deep V, and then the major low here that sets up on the 21st. I think they're going to be double lows. In other words, like a double bottom setup. But this secondary low could be lower or higher than this previous low. We just need to see how it plays out. What I know is that these two lows are setting up, and it's been pretty solid. these patterns have been really quite solid, quite accurate. You saw that we had the top, major top here around the 18th, a peak around the 20th. And then that actually happened right back over here. There was the top pattern around the 20th, 21st. And of course, it happened 2 or 3 days later with the inauguration. And that was a bit of a Trump, Trump rally. Now we're getting into this Trump kind of a breakdown with these unexpected executive orders and the gutting of the federal government. So, we are really looking at a fairly strong breakdown. I'm going to extend this line out because this line could become very important. So really, we're kind of moving down into this area, right here. Okay. And that's what I want you guys to be aware is we're trying to get into this deep low setup, which may be around the 575 area. Remember, that's the base area back over here. So why is this 575 area so important? Is because that's the base area we were just at prior to the inauguration. Okay. So now people have been asking, what's coming? What do you think is going to happen? Well, look, I'm already kind of laying it out. So, I think this 580 to 584 area right over here happens before, oops, come here. Right here, I think this 580 to 584 area happens before the deep V bottom. So I think we're going to be breaking down basically 15 to 20 points into this area by Thursday, Friday. That's my opinion. Somewhere between, and I could raise this a little bit. This is my gut. So let's just say somewhere between 580 and 586, 587, somewhere in that area. We're going to break down from this area about 14, 15, 16 points, maybe a bit more. Try to find support in this 580 to 587 area. Then next week, I think we're going to get some sort of disruption on the weekend, like we've been getting with these big gaps, and we'll see some sort of a deep V. Now, this one, I think the deep V pattern could take 2 days, maybe 3 days to resolve back to the upside. And eventually we're going to be back up to this 580, 587 area again. So I'm looking for kind of a very deep low rolling back up and out. Now, again, pay attention because what that might do to metals and the metals, I'm going to get to metals here in a bit. We're having a pretty solid rally, $15 here in gold. But what that may do to metals around the 10th or 11th is, assuming we roll up in metals over here and continue to roll into that 10th, 11th time frame, kind of like this, we may end up getting some sort of a deep pullback in metals. Now, maybe drawn that a little too aggressively. So we'll spread this a little more and understand that even though we could end up seeing metals rallying up into this area, we may end up getting some sudden deep pullback in metals because of the deep V pattern. And we may end up getting the same type of thing around the 21st. So be aware that there's a pretty good chance we could end up with some sort of a deep kind of a pullback move in metals setting up around that 10th, 11th, 12th time frame. Okay. I mean, it's just happens to be the way the markets work. When the markets move into a deep kind of a panic selling, metals oftentimes moves into a deep kind of panic selling as well. Okay, so let me go back here to the SPY. And really, we're just looking kind of at that rolling kind of a topping pattern today, moving into that weakening downtrend this way. So really playing right across here all the way down. And like I said, this is a consolidation pattern of the excess phase peak pattern. and it looks like we're going to roll down to that, 580 to 587 area. So this sets up a pretty good little rolling peak. So this is the consolidation. This is see, we get the peak, the pullback, the flag, and the consolidation, which is C. So this is C, EPP. And that means here's our peak over here, A peak. Now this is the flag, B flag. And there's our A peak. So the next thing would be for us to do would be to break down out of this mode into this deeper mode, seeking the ultimate low. So we would get this, we get the breakdown, we move into consolidation, which is actually D. Sorry, my bad. And then here's the B breakdown of the flag right here. B. Okay. Wow. Spam calls at 5 o'clock in the morning. Gotta love it. And then here is the ultimate low. And that's kind of how we're playing this, guys. It's rolling through this breakdown, consolidation in this range, and then the ultimate low is going to really be kind of a roll, pause, and then a roll. So kind of like an A, B, C type of a move all the way down. Okay, QQQ. Rolling over here in the same type of setup. Let me get rid of some of these lines. You can see where we're at here. Get rid of that line. Get rid of that line. Get rid of that line. And that line. Let's carry these a little better. And spread this up. This is a 1 hour chart again. Got a lot going on over here. Trying to get rid of data to show you what's happening. Here's that February 10th, 11th time frame. Again, that low. Here's our secondary excess phase peak pattern showing up. You can see it right here, coming up to here, coming back down to here, and then flagging up like this. I'll draw this again in blue. Whoops. Bright blue. You can see we've rolled out of that, come right back down to this low. So we haven't seen the breakdown yet. Okay, because we haven't seen the breakdown here, we would be looking for a breakdown of this flag, rolling back down into a new lower low, consolidating, and it may not be that quick, but it would be something like this, rolling into consolidation and then breaking down, and then breaking down into that pattern again too. This area, because it's kind of a double setup, in essence, we have this excess phase peak pattern, and then we have a secondary one setting up right here. So we have kind of this dual pattern setting up, and it's kind of interesting in the sense that we're getting this rolling dual pattern. Now, normally I would come in here and I would look at this and I would say, well, that provides a lot of support down in this area. And I still think that's valid. I still think there's a lot of support down in this area. Okay. I think that ultimately, though, the resistance that we're getting off of this channel coming right across here and potentially coming right across here, depending on where this peak sets up today. So imagine if we get the pattern that I expect, we're going to get this rolling type of a price pattern. Start over. This is hourly, kind of a rolling type of price pattern into a breakdown mode and into that Thursday, Monday time frame. Pretty much kind of coming like this and then rolling into the deeper low here. So if we do get that kind of a breakdown, what's going to happen here is, where is our consolidation? We need to break this low to get into our consolidation mode. And what this would mean is, if we do get this double bottom, this then becomes consolidation. Consolidation starts to show up over here into this low range here. And that consolidation sets up in a way that we are preparing for potentially a deeper low in the NASDAQ, in the QQQs. So understand that if we get this break, this double bottom here, double setup of an excess phase peak low, and it breaks, then this becomes consolidation potentially, and that the consolidation itself would that indicate that we either fail at the consolidation level here, or we break downward into an ultimate low pattern somewhere, maybe back over here. So, we're really looking at this as, this is the next target. If you understand what I'm trying to tell you, this area here is very, very critical to us, because if this breakdown confirms with my patterns and my double low, we need to see how this sets up. If this sets up as consolidation and not some major ultimate low, then we're still in the midst of this big broad pattern, and we could potentially be looking at much deeper pullback. I mean, we could be looking at an extensive pullback in the technology sector and the NASDAQ, possibly trying to get down into these lower low areas, possibly trying to get down into this area or this area, which carries over from here. So be aware that the setup itself is telling us that the NASDAQ has a lot of potential weakness to the downside. The S&P, believe it or not, may not have quite as much. I think the S&P is going to be more stable than the NASDAQ and the Qs in the technology sector overall. So we'll see how it plays out here. But again, multiple excess phase peak patterns setting up in a very interesting scenario. You can see them right here. Got the bigger red pattern. We've got the blue pattern here, and we've got the purple pattern here. We had this blue pattern here, which broke down, and you can see we ran into resistance right here. Of course, we ran into resistance right here. All right, no big deal. And then we rolled through this apexing, which is where we're at right now. I mean, everything is lining up for, a pretty big volatile shakeout. I mean, in fact, if I could show you here just for a minute, everything is lining up for a pretty big volatile shakeout. I'm going to try to draw this so you can see, but, let's just come right across these lows. I'll just try to come right across here. I'm going to have to draw this manually. Coming right across here and coming right across here. Oops. Again, trying to draw a straight line. So very interesting flagging setup here, right? Cross these lows, you can see we rolled right on up through. We get this peak. We come back down, A, B, C. We've come down to this level, D, potentially E, or you can count this as a peak going to A, B, C, D, and rolling into this E. We're getting these breakdowns, and these breakdowns could be wide volatility before we either A, roll into a recovery phase, which again is likely, but not out here until really June, July, August of 2025. So in reality, this would be more like this, causing a breakdown into this area, moving through here, and then rallying up into July, August, September over here. Or we could end up seeing again a bigger, deeper breakdown in the market, rolling through a more substantial, deeper rollover. So we're getting a lot of information here that indicates massive volatility, which is going to be great overall as a trader. I mean, big volatility, big swings means, as a trader, we don't care. We just want to trade it and we want to make money off it. If you're an investor, yeah, you don't want to see things fall that much. But, from where we're at right now, this area is looking very, very important. We need to see how this plays out. Okay. And remember, we're looking at a come back over here, come back over here. We're looking at a rally phase in trend mode and then a counter trend rally tomorrow, which is a downward bar. Okay. Spent enough time on the QQQ and the others. Now we go to metals. Metals have really started to make a move here. I showed you earlier here with gold. Let this load back up. We're looking at a pretty solid move. We're up to almost 12. We got above 2,900, it looks like. Let's come back over here and take a quick look. Oops, come to data. It'd be so cool. 2901 and a half. Look at that. Huge. So we're up above 2,900. We're playing very solidly into my rally phase. Remember, I really think that we're going to be moving aggressively up to that 3 grand, 31, 3,200 area. Now we got to get through these pullback areas that I told you may happen. So I'm going to tell you again that, same thing here. Okay, we've got the same pullback issue taking place here. I'll make sure I'm at the right one. Yep. We are looking at basically a rally on up, potentially into a potential pullback on the 10th, and then a rally up into a potential pullback on the 21st, which is way out here. '17th, okay, '18th coming down into the 21st, potentially looking for some decent pullbacks. Now, silver is going to be a lot more volatile than gold. Okay. And that's just the way it is. Silver reacts differently and tends to lag gold. Gold, I see really pushing strongly back up to this, 33, 3,400, like I've drawn up here. Actually, I haven't even gotten close. So I think we're going to be moving very cleanly up into this 32, 3,300 area fairly aggressively, meaning we could see it before the end of February rallying up into this area. And what that would mean for silver is that 10th, 20th, so I may have drawn, this is the 27th, this is a 2-hour, 10, where's the 20th pullback? I didn't draw it, so let me come over here. So the 20th right here, rallying on up, 14th, 15th, 17th, and then we get the possible pullback into the 21st, and then we rally up even higher. And here we have that same type of a move into March. And again, I'll get rid of some of these lines. So again, we're looking at a pretty solid move here. And the way this plays out is that metals are acting as a hedge against risk. If you understand what Trump is doing, Trump is trying to rectify issues related to previous administration um, concerns. So it's, he did it in his first term too. And, like him or not, the whole idea here is he is coming in as a fixer, which is what I talked about when prior to him being elected, is that the whole idea that he's coming in as a fixer to try to solve these continuing potential problems. Overspending, we don't know what we're spending on, we don't know what we're doing. We just keep blindly kind of, head down, go forward. We don't think. We're almost like robotics. And I think what's happening is it's going to be fairly disruptive for the markets, which is going to send gold and silver, much higher. So again, that's kind of where we're at. I think we're going to see gold and silver really begin to take off here. If gold rallies up to 31, above 3,000 before the end of February, then silver very likely is going to be, there goes my buddy chatting, then silver is probably going to be up in this $36, $37 area before the end of February or March. So, be prepared. We're still looking at a pretty good move here. In fact, if I were to redraw this whole thing to try to get this to align properly, we're coming into that 7, 8, 10. So we get the pullback, we rally back out, we get the pullback, we rally back out. And, that puts you into the March 3rd, 4th, 5th area around 30, 35, 36, maybe 37, depending on how strong gold rallies. And I think gold will rally excessively. I really think this is a big breakout move for gold. Okay, so now we're going to come back over here and over here. And we're going to go to Bitcoin. Maybe go to Bitcoin. No. Okay, let's come over here. BTC USD. And Bitcoin is still moving through that big flagging formation. You can see we talked about it, and I've been kind of picking apart Bitcoin very cleanly. We have our little downward move. We have our little flagging formation right here. So you can see we've moved through this low into this flagging formation, this purple flagging formation. We're extending this downward kind of a channel. So I'll redraw it. So we have this downward excess phase peak. It's called an inverted excess phase peak. And now we're moving across this low in red. We are continuing to trend downward. We have technically broken below this low here, which is good. You can see right here, this 97,279. We should be moving into consolidation, which means I would expect Bitcoin to roll back down into this area, try to consolidate, and then attempt to roll downward. That's this bluish purple breakdown right here. That's this little excess phase peak pattern. We've technically rolled downward. And if we do this, we would invalidate this excess phase peak trigger, the red one, and move into a downward trend, which would then, of course, try to coordinate around our deep low. And I think this is a pretty common kind of a deep low scenario here. Kind of getting into this mode, breaking downward, maybe down into this 82,000 area for the deep low. So I'm watching for this to kind of break down. We might get a little base rally today, but I think we're going to roll down into this 92,000 area again by Thursday, Friday, maybe a little lower. And then we could see a very big breakdown multiple days, maybe Friday, Saturday, Sunday, Monday, Tuesday into this breakdown pattern, depend on what happens. So be prepared, guys. We could see, if my math is correct and my analysis, could see about a 13 to 15, maybe 16%, 17% downside move in Bitcoin over the next 4 or 5 days. So from 98,000 and change to maybe 82, call it 80 to 84,000 maybe. So if I were to pick a target area, I would say probably right around in this area. And again, that basically boils down to, a range of these previous levels. I've done it before for you, but if we take a look at this on a Fibonacci extension and we go from the high to the low and back up to the high, you can see that we can get down into the 1.5 and 1.618 area. That puts us at 82,000 to 84,000. So 82 to 84 puts us right in this area. And that would be a decent little target area for Bitcoin headed on the way down. All right, 31 minutes. I didn't mean to go this long. Okay, guys, let's prepare for this move. I mean, like I said, great opportunities. We have a real opportunity to make some money here if you position nicely for this. I know that a lot of you guys are asking questions. I appreciate it. I'm here to try to help. Remember, my analysis is not 100% accurate. I wish it was, because I'd be off on my gold-plated island somewhere. And in the meantime, you guys, we need to basically be aware of what we're doing. Now, I started talking to people the other day, and I'm going to just highlight this at the end of the video, assuming I still have it up. But I'm gonna do this. I'm gonna set up an account, start with $1,000 or $2,000, and I swear to God, I'm gonna do this. This is something that just seems too simple to me. But 10 to 15% a day, if you could target 10 to 15% a day. Now, these are trading days. You got to understand, 23 trading days roughly is a month. But trade 1/3 of your capital, start with $1,000, target 15% a day. And if you do that after about, so you do 50, 55 days is 2 months, roughly. So there's 2 months, you'd have 10,000. And then 2 months later, you'd have 119,000. And then 2 months later, you'd have 1.3 million. So now it seems crazy, but it's the power of compounding. And I think I'm just going to go ahead and set this thing up for you and dedicate myself to trying to do this so I can show you guys. And, it'd be a hell of a success story. Imagine turning 1,000 into 1.3 million just by, taking 2 or 3 targeted trades every day and knock it out. But I think anybody can do this with the right tools. So I'm trying to help you guys out with the tools by showing you what I see and showing you how these things are setting up. So ideally, like I said, it would be a wonderful success story. It'd be a wonderful, example of what can be done. And, it's literally right there waiting for you. The markets are essentially giving you this opportunity every day. So let's go get some today, guys. And remember, try to position for that breakdown deep V that's coming sometime between Friday, the 9th or the 7th, and into Monday, Tuesday, Wednesday. That would be the 10th, 11th, 12th. So understand that we're looking at a pretty good opportunity. If my calculations are correct, we're looking at a potential downward move of 3.5 to almost 5% over the next 4 or 5 days in the SPY and the NASDAQ and many other sectors. So it could be a very interesting move here, guys. Really, really crazy. All right, that's it. Talk to you later.